Number 4 is about limit orders. Now, I know a lot of you own stocks directly because that's a key ongoing theme, not just on this podcast, Rule Breaker Investing, though it is, but certainly with many Motley Fool services. And really, it's really a part of the whole Motley Fool mission. And so a lot of us probably have some experience with typing in trades. Now, I will tell you that when I trade a stock, which is infrequently, I typically am buying and then holding and holding and holding for years and only selling if I need to often, or if the company has gotten bought out, or if I decide I don't like the company for whatever reason anymore. But I'm very uber patient with my investing. So even using the word trading or typing in a trade, you should not picture anything frenetic. If you're trying to picture me, this is something that I do dispassionately, just a few times a year. Lots of buying, not much selling. So I just use market orders. And for those of you who are not familiar with what I'm talking about, when you do buy or sell a stock, you have a couple choices in terms of how you would like that trade executed. Now, if you want to just mail it in, keep it simple like I do, I almost exclusively my entire life have just used market orders. Especially these days, the markets are much more liquid. There's somebody on the other side of every trade. There's a lot of money sloshing around out there. So you don't really, in my experience, have much problem, especially with the kinds of companies that we look for, with a big spread between the bid and the ask. I'm not going to get into the technicals here, but basically, when you see a stock price quoted, you can generally within a second buy it right where it was, especially the kinds of companies that we talk about here in Rule Breaker Investing. So for me, it's just simple to place a market order. However, some people swear by limit orders. They like to think that they're going to set the price whereby they buy a stock. So let's just pretend that a stock is trading at, I don't know, $35.14. So if it were I would just go right ahead and buy it right there at $35.14. But some people decide they can get a better deal. So they'll type in a limit order at 35. And what that means is they're telling the person who's executing the trades, the broker, they're telling him, wait till the stock gets down to 35 and then buy. Do not buy until it gets to 35. And those are limit orders. So you can use that when you buy and or when you sell. Again, I never use them, but some people swear by them. My suggestion, so we're going to call this number 4, we're calling this a trick. My suggestion is not to use round numbers. In my experience, people who use limit orders typically will say 35.00 for the buy, or they want to sell at 110.00. A lot of people think very conventionally that way, and so I've never been on the brokerage end of it, but I can imagine when you're looking at people who have limit orders and they're all jumping all over each other at an exact point that is the round number taken out to the 100th, the extra decimal. Everybody's kind of sitting there at an even number. So my suggestion is never put your limit orders at 00 in terms of cents. Why not put it at 01 or at, if you're looking to, let's say, sell a stock, don't try to sell at 100.00. Sell at 99.98. So what's the thinking going on here? Well, the bad news is sometimes the stock you really wanted to buy at 35 that was at $35.14 never does make it down to 35. There are a lot of people who are hoping to buy it there, but you, by just placing your limit order 1 penny or a few pennies higher, you stand a much better chance of getting ahead of all the other herd that's sitting there at that even number, and you can get your trade completed. Again, whether it's your buy or your sell. So I would be the guy placing my limit order, if I ever use them, at $35.01, not 35 even. Or if I'm looking to sell, let's just pick a big round number like 100 again, I would be placing my limit order at $99.98. Who cares about an extra 2 pennies? But that's going to get you out ahead of all the other people who are sitting there waiting for the stock they hope to hit 100 even. Now, this concept is a little bit broader, right? Because we're just talking about not spending too much time where everybody else is at the round numbers. You're just adding a digit or tweaking a digit here or there in order to separate yourself from the herd. It reminds me of the old game show, The Price is Right. I think a lot of us have probably seen that show, and I say the old game show, I think it's still going, but it's been around for decades, and one of the basic games of that game show, I had to look up the title. They actually call it One Bid. So that's the name of the basic game that studio contestants play, drawn down from the audience, in order to see who's going to get to go up on the stage with the host and play a mini game for bigger dollars. You've probably seen this one before, but the host will show a product, and each of the 4 players will guess what the price of that product is. And they have one bid. That's the name of this mini game. And typically what you'll see is somebody will say, let's go with $137. And the last person will say $138. They'll position themselves just a single dollar minimum increment higher than the other person's guess. It's always kind of a nasty move, but it's very effective. They're basically roping off that person's chance of winning and taking the gap in between 137 and whatever the next highest bid is, because it's all about bidding without going over. So without trying to over-explain this, I think a lot of us have seen The Price is Right. You know this game, and that's the same trick that I just gave you around limit orders. You're displacing the majority or the herd with a number that's just slightly off, putting yourself in an advantageous position. Works on The Price is Right, and I think it probably works in the world of limit orders. So there's a thought.